traders, Gary Wagner here, just after 10 o'clock in Honolulu, 4 o'clock in New York. It is Wednesday, 19th day of August, 2015, and this is the Daily Report for Gold and Silver. Following release of the Fed minutes, we have had these markets really taking off, precious metals moving dramatically to the upside, equities markets moving dramatically to the downside. Also, oil really falling out of bed. We might touch on that, time permitting. First to gold. Gold currently trading $1133.30, puts it up roughly $16 on the day. It opened at 17. It's had a high of 34, so we're just right around the highs and a low of 111.1550. As far as silver goes, silver today did have a tremendous showing on the day. Let's go ahead and look at the board. That up over 3%, 1525, high 1532, low 79, 1479. We're neutral, or we had no position in silver, but we did have one in gold. In our gold position, we did recommend putting an OCO roughly at 1128. So we got in at 1104, we got out at 1128. And the real question, of course, is going to be what to do next. It hit our resistance, moved down a little bit. We'll take a look at a couple of intraday charts in a second, but it does appear as though it's moved past that, and we might actually see that 28 to 32 level becoming support rather than resistance. That being said, and if that's the case, we will look to re-enter this market from the long side. I don't mind missing a couple dollars, as we would here. Markets at 34 right now. We got out at 28. The key is that we took a decent profit on the market, and I have no fear buying breakouts, and I have no fear buying dips. So what we want to do is see how the market reacts. It's going to go into the close. COMEX, of course, is already closed, but this that we're looking at is the spot market, and we'll look to see if it continues to firm and doesn't really back off at all. We'll look to re-enter it today or tomorrow morning. So for now, we have our initial trade in gold in at, as I said, 1104.50, out at 1128. So as I said, we are still actively trading in the Forex. COMEX is basically closed. Globex is going to open. But I want to take a look at a couple of different channels and show you exactly what I'm talking about and where we stand currently. To do that, the best way is to take a look at the 720-minute chart. Now, when we do this, we have identified some key resistance points and key support levels. We talked about the fact yesterday that it absolutely appeared as though this 1109, this is the 23% retracement that we have in here, seemed to point quite eloquently, because when we look at that low that we got just a few days ago, these are half a day charts, so you get 2 candles per day. So just yesterday, we did touch upon that low, but that low absolutely did become, I believe, a level of support. So we currently have support that we can identify with some certainty at 1109. Now let's take a look at this 1132. One of the reasons that we put our price order in at 28 was not because we saw resistance at 28, but we saw resistance here at 1132, that being the 38% retracement level. You can see that this market is just above, by the slightest bit, that particular price point. So what we really need to determine is whether or not this market's going to back off from this or really barrel through this, because if it does barrel through this, traders, our next level and our next target is going to be 1151. Now, even if we do see some sort of a pullback, my target is still 1151. In other words, what we're looking at is our market moving down, consolidating, breaking to the upside. From that point to the upside, if it does correct, then what we'd want to do, of course, is take a look at these fib levels from just the last rally that we saw, which is roughly from these lows here to this high here. Now, as you can see, I've quickly added a fib retracement, and I'm not saying that it's going to retrace. What we are doing is attempting to model some moves in the market to ascertain where we think it could go. And so that being said, If in fact it corrects, we could see the market move up like this, and then the key points now become 11,1870 and then 1109. Now, what I find quite interesting about 1109 is you notice we have a harmonics, meaning that the 38% retracement level from here matches up with the 23% retracement right here. Let me go ahead and kind of highlight that for you. You can see that this is 23 and also 38. And that is a true harmonics. It's pretty much at the same point, 1109.10 and 1109.80. So that's pretty much the same point. Now, because I am a bull in my heart in terms of gold prices, I am hoping that we do see a burst above this point 32, and as I said, I have no problem re-entering the breakout. Even if we get in at 35 or 36, I still think at minimum we could see this market go to 51. The other thing that we would plot, of course, is the 68 level. Now, there's another thing that we want to take a look at in terms of making a market projection of where we think this market might move. And to do that, we want to look at a couple of Elliott wave projections. And I've done just that. I've pulled up a daily chart. On this daily chart, you can see that our basic projections at this point for this particular rally could take us anywhere to around 51, 52, as we said, on the low side. On the high side, we could see this market go as high as 1180 or 1190. This is the basic target area that we're looking at in terms of what I tend to call our sweet spot, or our band of current strong resistance at the upper ends of this market. So based upon both our Elliott wave study as well as our Fibonacci retracement studies, we're coming up with at least 51. And let's take a look at the Fib retracement one more time and put in that 68% retracement level. Excuse me, I meant 61.8% retracement level. And when we do that, you can see we've genuinely now seen this market have the ability, in terms of this projection, to look at the 1170 area. Now, when we put in this particular line, historically speaking, and we're looking at our same 720-minute chart, this entire area down here was a supportive area. So the fact that support and resistance would kind of coalesce, meaning one man's resistance is another man's support, it depends on where we're looking at it. If we're on the second floor looking up or the third floor looking down, in this case, here we're looking up at the third floor, and that's resistance to us. But up here, it was certainly support. So this would be, in terms of upside potential, this would be the model that we would look at in terms of where we believe this market could go to. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.